There's a general sentiment overall for online gaming, iGaming, online poker, online blackjack, online sports betting. That franchise is one where you could see, yes, more upside, a total addressable market that seems to grow and brings everybody up along with it. The other names that I guess maybe would be interesting here to look at besides Penn and them is Rush Street Interactive. That's a name that a lot of people don't talk about, but does power a lot of the online gaming platforms for state-sanctioned and state kind of platforms for online gaming. So that's Play Sugar House, that's BetRivers.com, those names. So an interesting call, but, obviously it's hard to pick a side when you're taking a look at these names, because I think a lot of people that do it are trying to play for the whole industry to go bigger.
Guys, I think Dom's been doing his channel checks in this space. Michael, over to you. I do like the idea of buying the picks and shovels for the gold rush, so to speak, which is that last name that Dom mentioned.
Yeah, well, that has some merit. I think, when you look at these kind of calls, when you look at a sell and you look at a buy, what's really the catalyst for the buy? And I think, obviously the picking analyst is not here, but if you look at what's going on with Penn, they just got recent regulatory approval in Canada to expand their business model. That's probably what the catalyst is. Both of these stocks are kind of floating along. The overall industry, as Dom said, is going to continue to go up. But I think Penn is probably getting the push because of the Canadian regulation. I'm a little skeptical that DraftKings is going to have the problems that the analysts are talking about. But again, I agree. Both of these names, this entire space is going to get bigger and bigger.
Nancy, I'll give you the final word on this. And I will mention the analyst we had on about a month ago to kind of kick off football season said his concern with Penn was that it had been underperforming despite the brand's popularity, Barstool and all of that with Gen Z and the younger groups, and that it was hard to unseat DraftKings and FanDuel for user-rated experience. In other words, the apps just work very well.
Yeah, I think that's a valid point. I also think underperformance is a reason this stock is somewhat interesting here. I mean, we've been looking at it for a long time, but as someone who learned to read on the racing forum, poring over it with my dad at horse races, I actually like the broad-based nature of Penn's business and the fact that they have a tremendous cross-sell opportunity. So I think if you're looking for a new name, this is an interesting one to pick away at because it's going to benefit from the overall market, total addressable market growth, but also maybe not at the same level as some other names, but I think it's a safe name, strong earnings, decent multiple.
All right, so some votes here for Penn for the whole space, and I'm less worried about teaching my kids to read now. You can learn that way. Next, Evercore ISI is swapping Facebook for Netflix as one of its top mega cap picks. The firm saying Facebook is still attractive despite a 13% sell-off on the whistleblower stuff, citing how it's rallied off previous scandals like Cambridge Analytica back in 2018. But Evercore says it's time to step aside after Netflix's recent rally. The shares are up 16% in the past 3 months, despite reporting a subscriber slowdown in Q2. Michael, Facebook versus Netflix, which would you?
Well, this is a valuation call, obviously. The call's being made that Netflix has already had a huge run and Facebook is really under pressure right now. It's hard to buy stocks, even if they have tailwinds. It's hard to buy stocks that really have this kind of momentum forward and are at this high price. So I think Facebook is the better valuation stock right now.
All right, Nancy?
Yeah, I'm a reluctant shareholder. I think the management team is smug, at best cynical. But the business model is hard to argue with. The BLM boycott resulted in them growing advertisers, and although they've seen some recent slowdown, I just don't see how this business model gets upended. So, bad governance, not great management team, but a great business model.
Interesting. So 2 votes for Facebook. Dom, what would you add here?
I would add that when you look at Netflix, over the course of the market volatility that we've seen in a lot of mega cap comms companies and tech companies, Facebook has been a relative outperformer, a real standout, hitting record highs despite the fact things have sold off. So I wonder from a story standpoint, because we're reporters, right? Kelly, we like to talk about narratives and stories. Which one is driving Netflix these days? Is it still kind of like that pandemic effect there? Will people kind of stay on there? Is it Squid Game because programming is such a juggernaut at Netflix? Or was there just a general sense that Netflix might be immune sentiment-wise to some of the downturn in other parts of the market? Those are all things I'd like to see answers for. It could be a great story or a great movie down the line for Netflix.
Yeah, or maybe a great stock in that case. All right, a quick programming note. Mark Mahaney, the Evercore ISI analyst behind that Facebook call, will be on closing bell today at 3 p.m. Eastern time, so he'll elaborate more on that. And we'll move along. Morgan Stanley seeing limited upside in the pharma space ahead of Q3 earnings. They're cautiously bullish on Pfizer and Merck, upping the price target by about $3 for each one, mostly on COVID vaccine and treatment sales. And they're lowering their Bristol-Myers target, citing failure in a key trial drug. Pfizer and Merck in the green this year. It's a rougher slog for Bristol, Nancy, which is down 7%.
Yeah, I think healthcare's fraught here, Kelly. We lowered our exposure to the traditional pharmas. Happily, we exited Amgen a while back, and we've been redeploying to the extent that we've added to healthcare in CVS, Stryker, Medtronic. I think pharmaceuticals are a place that you want to sort of stay on the sideline, and the price increases that they put forward were just 10%. So I think there's better places to be in this market.
And Michael, as you know, Nancy mentioned Amgen there as well as a tough one. We just said that's at its lowest level since early 2020. So even as a number of people have been coming on air and talking about how healthcare is a place to be for stagflation or for different reasons, it's undervalued, it's under. We talked about the biotechs have been a pretty rough trade this year. Why has it been a struggle to gain traction? And do you think that Pfizer and Merck then kind of are the obvious candidates for outperformance?
Well, there's a lot of questions there, Kelly. So, let me see. So I think Pfizer and Merck, I think, are. We're not on the sidelines regarding pharmaceuticals. We think pharmaceuticals, with the new RNA platform in terms of vaccine development, is going to be a growth area, and you're getting a great dividend. That's something you didn't mention, but I think that's a big reason why you buy these pharmas. I do, as was just said, like the medical device sort of names, and then just sort of traditional pharma that are not really cutting edge, not really vaccine development, I'm a little more cautious on.
All right, Dom, we could have told two stories about healthcare this year. And the one is that, you know, the race to respond to COVID highlights, you know, the attractiveness of the whole asset class. And the other is that it sucks up all the oxygen in the room. And so far, the latter seems to be playing.
I mean, that's the whole idea behind pharma, right? I mean, we haven't really talked about any of the companies out there who've made kind of breakthrough drug designations there for some of their drugs, approvals on the FDA front for some of the smaller mid-cap biotechs, because the entire narrative has almost been driven exclusively by COVID. I'm not sure how long that lasts. In fact, I hope it doesn't last, right? Because from a human race standpoint, I think that COVID hopefully gets in the rearview mirror at some point.
Yeah.
But I think it's interesting because the one thing that I thought about in this pharma story, and it might just be this whole East Bay connection that Michael Yoshikami and I have, I kept thinking about the dividend. When I think of large cap pharma, I think of dividends. Pre-COVID, I just thought of dividends, and that might be one of those things that a lot of investors are keying on, although I'm not sure if interest rates keep going higher, how much more those dividends become more attractive.
But if they don't, or if it's a slow climb, they still look pretty good from here. All right, before we leave, let's talk about this last call. Citi isn't ready to bail on the chip wreck just yet. It's maintaining buy ratings on two key names, but shuffling their rankings. They're dropping Texas Instruments down its list on weak third quarter guidance, and moving up Analog Devices, citing margin upside driven by the recent merger with rival Maxim Integrated Products, she said. Both of these names, TI and Analog, are seeing nice gains this year. Trailing the market, though, they're up about 10% apiece. Nancy, you know, whether it's these two names in particular, sort of others in this space, what would you do here?
Well, we like the chip space. We're long, we're overweight, and in semiconductor equipment. But I love Texas Instruments as a company. And, you know, at the margin, ADI might outperform in the near term, but you've got a fabulous management team at Texas Instruments who's experienced the capital allocation plan. To Michael's point about dividends, is fantastic. This is a 2.5% yielder with 18% 5-year or 22% annualized 5-year growth. And they're in the space that has the strongest demand. Autos and industrial demand is the strongest in total, and that's 24% of total addressable market for semi. So I like it. I don't agree with the call. I like the whole space. We own Broadcom. We own Lam Research, and we own, I can't even remember the last name, but we're overweight.